Welcome to ABG Sundal Collier's Investor Days. My name is Victor Kruger, and I'm a real estate analyst here at ABG. Next to present is Eastnine, and with us from the company we have the CEO, Kestutis Sasnauskas, and the CFO, Britt-Marie Nyman. The floor is yours.
Thank you very much. And let's go directly to presentation. So if we move to page number 2. Operator, everything all right? Okay, thank you. So Eastnine in brief, we are a Swedish real estate company listed on the Nasdaq mid-cap list here in Stockholm. But all of our properties are actually in the Baltics. Despite that, actually most of our tenants are actually Nordic tenants. So we are a Nordic-Baltic type of company. Just in brief, our assets, our properties are around 3.5 billion SEK in value today, but growing very fast. Our rental income comprises around 21 million euros. Property yield at 5.5%, LTV 49%. Today we hold approximately a portfolio of 121,000 square meters of prime offices in the Baltic states. Our properties are valued below 3,000 per square meter, which is relatively low, and I will go into it further on. And we have a market cap of around 2.5 billion SEK. Our surplus ratio is around 90%. Before we go into the market, if we move to the next slide, actually I would like to draw your attention to the Baltics as a region, because Baltics is a part of the Nordics, and we call it the new Nordics. And it's a region actually which is bigger than Finland, is bigger than Norway, and bigger than Denmark in its population. However, we have very low transaction volume still in the Baltics, but it's growing. And we have three capital cities are among the 10 largest Nordic cities. So, which makes this kind of capital cities at least a very, very attractive market. It also is in combination with much higher yields. If you look on the graph in the middle, you see that the yields are significantly above the Nordic markets. At the same time, our rental levels are significantly lower. And this is a part of a history that Baltics actually have evolved much slower due to the Soviet occupation after Second World War. But overall, it's very, very comparable to Finland. If we move to the next slide, what is also important to note about the Baltics actually that in nominal terms, Baltics are lagging significantly behind the Nordic peers. But there is a very long convergence going on between these markets. And we see that Baltics have been growing approximately 3 times faster for the last 15 years, for the last 5 years, and this trend is continuous. So even if the gap is still very big, it's narrowing. And if you look on PPP level, this gap is already smaller. But overall, we see a big possibility to actually for long-term structural growth. It is also, if you look on the office market, the Baltic office market has come from a relatively small level, but has been growing all the time. Still, there's a lot of structural growth potential in the future, because if you look on average square meters per person in the capital cities, we are at around 1 square meter of office space per capita versus Nordic average of 4. So there is also longer term a lot of structural potential growth in the office segment as such, where we are in. If we move to the next slide. One good example is to show you a picture of Vilnius and its new developments. You see the names of the key tenants in the market, and you also recognize immediately a lot of international and Nordic names. But what is also very important to note about Vilnius is actually just 15 years ago, the whole Vilnius office market could be fitted in actually Hötorgsskraporna here in Stockholm, of around 100,000 square meters complex. So today it's actually 1 million square meters. And today Eastnine is the largest office holder in this Vilnius CBD area. Let's move to the next slide. If you look on our growth, we have transformed from investment company into real estate company, and this transformation has been going on since 2017. You can see actually growth on both slides, both in terms of the property values. We added on our portfolio over the time and transformed our portfolio over the time, but also our revenues and our profitability. And if you see on our just revenues, I mean, they increased more than almost like fivefold during the last 3 years. And we are still growing on the same path in the future. If we move to the next slide, you see some of our pictures of our buildings. We have 3 clusters in Vilnius CBD. Each of them, 2 of them are around 42,000 square meters and 20,000 square meters. The first is Saltoniškių. It's named number 1 on the map. If we move to the next slide. Second one on the map is Trys Burės. All properties in both 1 and 2 are actually LEED Platinum certified or BREEAM Excellent certified as well. So it's important to note. It's another 42,000 modern complex. If we move to the next slide. If we look, this is number 3, and here we have the most centrally located properties next to the parliament. Vertas 1 is already LEED Platinum certified property that we hold for 2 years now, and Vertas 2 is just recently acquired, and it's an add-on to Vertas 1. Those properties are almost interconnected, and we will certify that building in the future as well. So overall, 3 very strong clusters in Vilnius. If we move to the next slide. In Riga, we are located along the main street of Kristiana Valdemara, and with the most central property being number 1, it's Valdemara Centers. It is also our oldest property today, and only 20 years old. So in general, we have a very, very modern stock, and with a very, very centrally located properties. If we go to the next slide, we also have 2 development projects, number 3 and number 4, again along the same street. But if we have today in Riga around 20,000 square meters of office space, we have a development potential of around 55. So all in all, we will reach 75,000 square meters already with the portfolio that we have in the foreseeable future. If we move to the next slide. Looking at our tenants, actually our core tenants are again very much Nordic-centered names. Danske Bank being the largest, Telia, Swedbank, Visma, Citco, Webhelp, Lidl. So all of them are multinationals. Of course, it's a very stable tenant base, and to some extent today we have high concentration to the biggest names, but that concentration is a factor of our growth. So once our portfolio continues, this dependence on the largest tenants will decrease over time. At the same time, today it has been very, very stable base, and look at our performance, I think, in terms of among the Baltic real estate companies, our revenues have been most stable during the COVID times as well. If we move to the next slide, talking about sustainability. Sustainability is actually a core of our company. It's a part of our DNA, and we're very, very happy that today we received a lot of certifications that actually confirm our work that has been done. We received 5-star rating in GRESB with 87 points. We have also our green financing framework received Dark Green and Excellent by Cicero. 87% of our floor plates actually, or of our properties, area is LEED Platinum or BREEAM Excellent certified, which is among the highest in the industry today, both in terms of certification levels, but also in terms of the level of certification. We are on the top levels of both models. We also were ranked as number 3 in terms of gender equality among Swedish listed companies by Albright Foundation. And last but not the least, we also received 95% trust index in our internal employee survey at Great Place to Work, which we are very proud, and we have a fantastic team which is proud and ready to develop this company further. If we move to next page, having grown so fast, we still see a lot of opportunities ahead of us, and we just announced our new business plan, where we target actually to double our operations, both in terms of property values, but also in terms of profit from property management. Our financial targets entail 10% ROE, and 50% of the profits will be distributed as dividends. Loan to value shall not exceed 60%, equity to asset ratio at least 35, and interest coverage 2 times. In terms of sustainability targets, we actually aim to be carbon neutral from our operations in the property management by 2030. Entire property portfolio will be environmentally certified, and renewable energy shall account for 100% of property's energy consumption by 2030. Today, all of our electricity is already green. We still have certain connections with the state, with the municipal heating, this district heating, which is non-fossil free, but we're working on this to actually turn it into a fossil free. And if we move to next page, our non-core assets, we still hold 2 historic assets. One is a Baltic Property Fund number 2, which is gives us exposure to the real estate market in Estonia today, but this holding is in the divestment phase and will be divested. And we still hold Melon Fashion Group, which is a Russian fashion retailer, which is growing actually very fast and developing extremely well despite the pandemic, and growing extremely fast online. And among the Russian fashion retailers has probably the largest online share of its sales. So on this, I will leave over to Britt-Marie.
Thank you. Thank you. We continue with some key figures in brief for January-September. The occupancy rate increased to 94%. The surplus ratio increased to 90%, which is really high in comparison with Swedish companies. The average rent was 14.8 euro per square meter and month, corresponding to 1,800 SEK per year. LTV is below 50%. Only properties are leveraged. The return on equity real estate direct is lower than 2019 due to lower unrealized value changes. The return on equity total is close to 0. It's lower than 2019 due to a weakening ruble, which affected the holding in MFG. Profit from property management per share almost doubled, of course, due to a larger real estate portfolio, but also due to a higher occupancy rate and higher rent level. NAV per share and long-term NAV per share is almost back on the same level as at the end of 2019. Continue with next page. Current earning capacity versus the income statement for 2019. Eastnine is a growing company, and therefore historic figures is less interesting than future possibilities. The current earning capacity is a forward-looking snapshot for the coming 12 months. It's not a prognosis. What would the results be based on the existing situation as of September 30, 2020? It's based on current portfolio, current lease agreements, and current financing agreements. You can see that the profit from property management in the earning capacity doubled compared to the result for 2019. NOI increases by 60% and profit from property management with 110%. This is a typical example of economies of scale. Next page, financing. Only real estate investments are leveraged, non-core assets are unleveraged. Debt financing exclusively from 3 banks, SEB, Swedbank and OP Bank. We have no capital market financing yet. The loan maturity was 3.2 years, and the next loan maturity is in September next year. The interest maturity was 2.5 years. 75% of the loans have fixed interest. The average interest rate is stable around 2.3%. Continue with the next page, share and shareholding. Eastnine had approximately 5,100 shareholders by the end of September. Around 75% of those were Swedish. We had 2 shareholders with more than 10% of the shares in the company, and the free float was around 63%. In November, we reissued 1 million repurchased shares through an accelerated book building, and we got some new reputable shareholders not included in the list to the right. Continue with the board of directors. Liselott Hjort is chairman, former deputy CEO at SEB. She's been in the board since 2014 and chairman since 2018. Christian Hermelin, former CEO at Fabege, in the board since 2020. Peter Elam Håkansson, chairman and chief investment officer at East Capital, in the board since 2014. Peter Wågström, former CEO at NCC, in the board since 2018. And Ylva Sarby Westman, CFO and deputy CEO at Kungsleden, in the board since May this year. All board members are independent except for Peter Elam Håkansson, who is dependent versus major shareholders. Kestutis, I leave over to you.
Okay, thank you. So just to summarize actually who we are and why we consider ourselves being an attractive opportunity. We have actually during these years assembled an amazing, modern, sustainable portfolio of top modern properties in top locations in the Baltic capitals. Those properties generate fantastic and stable cash flow that can be used for further development of this business. We also are the major, as you could see from our tenants, actually major revenues generated again from the Nordic operation. So even if we have a Baltic properties, we have very much Nordic exposure in the underlying businesses of those companies. We also are leading in sustainability in the Baltics. I told you briefly about what we have achieved so far, but we are very determined to work in this area to push the sustainability agenda in the Baltics towards better future. There's so much to be done, and we expect to be in the lead in that area. And we see a fantastic growth journey ahead of us. It's not only our business plan that entails the doubling possibility in the nearest 3 years. We also see the underlying growth in the Baltics that I mentioned about, which this convergence is actually ticking every day towards the Nordics, and we see this as a very exciting opportunity ahead. So on this, I would open up for questions, and maybe you can join me.
Yes. Do you guys hear me?
Yes.
I heard my... Thank you so much. Great presentation. to begin with, to start with the capital raise, would you like to explain a little bit more? It was in November 18th, you took in 150 million Swedish kronor. Would you like just to specify in terms of your rationale for taking in this money and what you aim to use it for?
It's aimed to use for future growth as we entail this substantial growth plan. So we're working on new acquisitions.
Great.
So it will use for our growth, yeah.
Great, thanks. And you have 4 properties in Latvia's capital Riga right now, and then in 7 properties in Lithuania's Vilnius. Just looking at the space of these locations, it's 80% in Vilnius and 20% in Riga. How should you look at this split? Is it just a coincidence, or is it a prioritization from your side? And will this guide how you will invest going forward?
It's a result of a gradual build-up. So we entered the Riga market recently. We're building up our position. If you look on the project pipeline in Riga, we will reach 75,000 square meters within foreseeable future. So it will almost be relatively close to Vilnius. And everywhere we enter, we would like to have at least 100,000 square meters in each city to have a decent, profitable operations everywhere we enter. So in general, we would still continue growing in Vilnius. We will still continue growing in Riga. And at some point of time, we'll enter Tallinn as well.
Thank you. You're around just above 15 employed today in Sweden and in the Baltics together. How is your future employment need? What does it look like in terms of you growing as a company? How many more people will you need to hire as we go along the coming years?
Yeah, we're actually 21 as of today. And our growth will continue in the Baltic states mainly. So once our operations increase there, we acquire more properties, we will employ more people there. And Stockholm, in Stockholm we are 8?
We are 9.
9 in Stockholm, and we'll probably stay that here.
Are there any what type of roles are you looking at hiring?
We're looking mainly on the property level, so property management and lease out and so on.
All right. And if you were to give investors 3 key factors to look at now the coming in 2020, end of 2020 and in 2021 to understand that you're on the right path, what 3 key factors would you give me?
I think one is the growth that we entail, and we will continue growing. We have exciting opportunities on certain exits in our portfolio that will entail further growth and probably follow on this. And overall, I think in general we feel relatively confident despite the pandemic. Our revenues have been relatively stable, so I think everybody is worried about what fallout it will have, but so far we have seen relatively limited impact, and we expect maybe no bigger changes there.
And with growth comes higher efficiency
Absolutely.
And profitability.
Yeah.
Great. Both of you, Kestutis and Britt-Marie, thank you so much for attending today's presentation. That will conclude our call. Thank you.
Thank you very much.